It's a pleasure to be here. We're team Kylin. We're from China. Actually, we're MBA students from China Europe International Business School. My name is Daniel, and in Chinese my name is Lin. Actually, it means forest. So this is a case that's very close to my heart. I was an investment banker before joining SEEPS. I participated had a few deals of state-owned enterprise in China. So I'm glad that I can share some of my experience through this event.
Thanks. My name is Fei Yang. English name is Richard. I also come from China Europe International Business School in Shanghai. And I actually started my career with KPMG in audit and advisory back in the UK. And then after that, I joined HSBC and Deutsche Bank in internal audit functions. So I specialize in advise global banks on how to set up sufficient internal control procedures to manage their business risks.
Hi, good afternoon. My name is Danyin PAN. I'm also from China Europe International School. And before I joined the MBA program, I used to work in an SOE company in Shanghai. And it's a kind of a high technology park. So we are an industrial real estate company. We build up the buildings and we try to attract the foreign investment in a certain area. And this area has a preferential policy to support this company. So these companies are MNCs. They can set up their R&Ds or headquarters in that area. Also, some of the startups, they can get into our incubation program or to enjoy some of the preferential also. So I'm so glad to be here and meet you all. Thank you.
It's also speak to others who be put on camera as well.
Okay, sure. We'll keep that in mind. Thank you. Shall we start?
Yeah. Now our presentation will start. This is the team 6 with Kylin and from SEEPS. So today our presentation will be divided into 3 parts. The first one is the problem definition, the second is the recommendation, the third one is the plan of action. So first of all, our objective is to have the 5-year action plan for Slovenia Forest Limited as the BSF. So there are 3 main issues that we think we may focus on to solve. The first one is ownership. That means who owns the woodland, who are the shareholders of this company, and what is the right to the yields. And the second issue is the mechanism. That means how to manage this company and how to stabilize the market and the price, and in the end, how to allocate the earning of this company. So within these these two issues solved, then we can lead to a high return on the asset and also to get some of the social benefits. So before we get into the problem we found from this case, the first one, let's have a snapshot of the background. As we all know, that Slovenia just experienced a transformation from both from the political perspective and the economic perspective. So it's from the communism to the capitalism, and also from the planned economy to the market economy. That means a lot of companies in Slovenia, they experience the privatization process. And also we just have a very general comparison between the state-owned company and also the private company, their advantage and disadvantage. So both of them, they have a bunch of disadvantage, but how to utilize it in a certain scenario, that's the problem that we want to find. So from the case, there are 3 problems that we want to illustrate today. The first problem is low utilization of the forest due to ownership fragmentation. From the case that we know that 71% of the forest is private-owned in Slovenia. And these private-owned forest is very small. That means they have a high initial fixed cost to inhibit the frequency of cutting. And also you can ask why these small owners, they cannot collaborate each other and to work with each other as a team. There are some of the cultural issues behind it because it is hard for them to trust each other, and some of the owners, they just focus on to hold their land on their own and they just don't have a big picture from the state level. The second problem we found from this case is the low rate of return with the private concession right holders. That means we have seen a reputation risk from the financial arrangement the fund has with the 13 private concessionaires. This is also because from a few decades ago, the planned economy, the concession rate is fixed in advance and only subject to the floor of 1.5%, sale value of timber, that you can compare with the other country, which is Austria and Finland. Their return on the forest asset is much higher than that of the Slovenia. So this is a big problem that we want to solve. The third problem that is we find is no SOE or big unit to have a big plan to manage tropical forests efficiently, and the stability of this industry is not protected. So this is the value chain. This is the value chain of the industry. And from this value chain, we have a very simple analysis for the value-added part and ownership dominance. We found that only woodland and the logistics, we have the dominance of the state-owned companies here. But for those wood processing and trade are all held by the private companies. That means that directly leads to the result that high value added for forestry sectors are now in Slovenia, but in the neighboring countries, which is a big regret for Slovenia. So how to tackle these three problems? We have a SWOT analysis. From the strength perspective, we have a government support, both from the policy and financing perspective. That's why we're here and talking about this topic. And the second one is a favorable forestry geographic condition, because it's the second forest largest area in Europe. And also we have a linear infrastructure existing, also a lot of talented people who work in this industry. But from the weakness perspective, if we have a state-owned company to do it, then we may face the bureaucracy, and also we lack a certain kind of operation expertise because a lot of our operated by the private companies. And also how to get some of the control back from the private companies. Right now, who is the majority within the industry is a big problem. Also, high-value business left abroad, which as I mentioned. So here also some of the threat, because it's a natural resource, so you will face a natural disaster. Also, if you do it in the SOE way, then some of the corruption or low efficiency may happen under the SOE system. But we also have some opportunity, because this is an industry which is lucrative and also attractive. You can see the stable growth and increasing labor price. So this is an industry that we can get into and approach more of the opportunity behind it. So next we'll welcome Danyin PAN to give us the alternative and recommendations.
Okay, now I'm going to propose some measures for the Slovenia Forest Limited to become a masterpiece example of Slovenia state-owned enterprise. First, let's stand on the shoulder of the giants for a while. In the case, it said that there are several successful examples of forestry management companies. They're from Austria and Finland, and they both have comparably large scale and good profitability. Coming from China, we also know some Chinese state-owned companies which possess the same characteristics. Especially the Austrian model is extremely successful with the high profitability. From those companies, we can see something in common. They're all very integrated and have multiple business across the value chain. So we believe maybe it's that factor that will do the magic. And for SFL, we also have some multiple objectives to achieve. There should be capital appreciation, supporting mechanisms such as stabilizing the market, be able to achieve social benefit, for example, the education, tourism, and renewable energy. So our recommendation is all about learning from those successful examples and achieving those strategic targets. So our first recommendation is to tackle the 29% state-owned forestry and withdraw the concession rights from those private holders. After the contract expires, we reap the profits in ourselves once and for all. Because this is the fundamental reason that the previous fund has such a low rate of return. Due to the fact that there may be some corruption or manipulation of profit from the private company side. Only by going fully public-owned can SFL set out on the right track and have the capacity to start reforming the whole industry. So how do we do this? We're going to acquire the assets of those private concessionaires, because without the concession rights, those guys are basically useless anyway. So after that, SFL should be able to make managerial decisions such as the annual harvest plan, when to sell the wood, at what price to sell the wood, or who to sell to. And once the company becomes profitable, it should pay dividend to its state-owned shareholders. The second step is about the remaining 71, which is privately owned due to the ownership fragmentation, they're operating at a very low efficiency. So our job here is to help them achieve scale of economy and improve the utilization of the forestry. Learning from the successful examples of Austria, we are suggesting to set up a collective forestry ownership partnership, which is supposed to literally consolidate the individual ownership of the forestry. That means the forestry ownership still have the earning right while leaving the operation duty to a separate party, which we hope can be SFL with its credibility. It seems a rational decision to join such an OCC association because with the consolidated operation under the scale of economy, those private owners will get more than they could before. And our CFO will illustrate that number later. We also lobby the government to pay back, to purchase back from the partnership when the market is down as a trade condition for such an exchange. Okay, by consolidating those private ownership, it's easier for the regulator to monitor the whole industry as well. If the first steps go well, now we would have control over the forestry, the whole pie. So it's time that we enlarge the pie and facilitate growth and better synergy and positive externality. We suggest funding a forestry industry fund managed by SFL as the general partner and the other pension funds as the limited partners. Because as I said in the case, this seems to be a really attractive industry to invest. There are two missions of the fund. One is to achieve vertical integration by acquiring some shares from the downstream companies, for example, the wood processing and the logistics, and help them build facilities that will benefit the business of SFL. It's really going to be a win-win relationship. And the second mission is to conduct venture capital investment, which focuses on projects such as the Forest Park, Holiday Village, high-tech forestry companies, furniture companies, or renewable energy. Because as we see the case of Austria, Finland, and China, those successful forestry companies are all vertically integrated and have multiple business lines across the value chain. So we think it's sensible to do those as well. To address the target requirements of achieving social benefit, the fund can also collaborate with the government on scientific research and education. Okay, three things are essential for the success of a state-owned enterprise. Executive incentive, corporate governance, and stakeholder management. So supporting measures are also important to achieve our goals. We suggest hiring professional executives to manage the company. Their performance should be evaluated on an annual basis. We can also improve the corporate governance and bring more expertise by introducing independent directors and foreign strategic investors. If the company runs as we expect, it will by far exceed the financial requirements of listing on Euronext, the largest stock exchange in Europe. So getting listed could be another milestone of FSL because it will further increase the stakeholders' value and be easier to engage in acquisition or talent recruitment given the stock currency. Almost every stakeholder will benefit from SFL. The government will have more tax revenue, the forestry owner will have increased income, and the general partners, those pension funds, will have good yield and better portfolio. And Limber Company will have a stabilized Limber price. And last but not least, the Slovenia people will definitely have more employment opportunities. Okay, next our CFO will talk about numbers.
Thanks, Daniel. So based on Daniel's recommendation, this is the action plan and timeline. So the first thing we should do is set up the SFL legal entity and setting up some internal controls from day one. So in 2015, we have a big task of acquiring those 13 private concession companies previously working for the fund. And we plan to complete the acquisition by December and also start lobbying the private forest owners to persuade them to join the association so that we can achieve economies of scale. 2016, we raised the fund from the limited partners and we used the fund to invest in infrastructure investments such as developing tourism and upgrading storage and drying facilities in Port Copper. 2017 and 18, we enhanced our internal controls by having an external audit, financial statements, and also some internal audit functions, carrying out some risk checks. 2019, we aim to for an IPO in Euronext. So this is some financial projections based on our recommendation action plans. So the first one is the harvest volume. So the trend we can see here is although the annual stock growth remains the same for the 5-year period, the actual harvest increased, and that's attributing from increased private harvest as a result of the association scheme that we talked about, which is managed by FSL as well. The second is the timber market price. We can also see the market price continue to rise from 2015 to 2019, and basically two factors supporting that. The first one is the market price increase as a result of a historic data trend, and also we can start to export timber to emerging markets where the prices are higher. So based on all that assumptions, we draw up the financial plans for FSL itself over the 5-year period. End of 2019, achieved EBIT margin 76% and return per heart of 68 euros. And this is more in line with our peers in European countries. And also that percentage margin is in line with the private fund that we saw in the case. The revenue split up 2 parts, public sales, private management fee, which is charged at 10%, and cost of goods sold, the margin level from our peers in Austria, and these are carried forward from the financials in the fund. This illustrates that the private owners are better off to join the collective scheme. Over the 5-year period, standalone 3,000 euros, join us 5,000 euros, so it's better off to join the collective scheme. And this just demonstrates that we can raise enough finance for the acquisition we're talking about. A rough valuation, 70 million euros, based on financials, interest cover of 3.4 times interest cover. On top of that, we have 960 million worth of properties on balance sheet, which can be used as a pledge. So the conclusion that the bank finance is viable for acquisition plan. And this is the backup slides for questions. And that's the end of our presentation. We're open for questions. Thanks very much.
Questions? Sense?
Yeah, thank you for the excellent presentation, very well structured. The one question which connects to your questions previously, how you would tackle the investment, because you intend to buy from the existing concessionaires the machinery and stuff, and you would need quite an amount of money, and how that money be provided. You have here some explanation why there would be, the banks would give that money, but in the situation today, this might be difficult, but how do you see this?
Okay, so I'll talk about bank financing part. Basically, in our plan, there are 2 sources of finance. The first one is the bank finance, which I talked about in this slide, where we can see that, well, estimated purchase price about 70 million. But however, based on the interest rate of 5%, which is from European Central Bank data, annual interest 3.5 million. So if we can borrow all that from the bank, we have sufficient interest coverage and collateral. But on top of that, we have an additional source of financing, which is the GPLP fund structure, which Daniel talked about earlier. So Daniel can explain a little bit more on that.
Well, basically, there are 2 investment entities: the limited company, the FSL, and the fund. The funding basically comes from the pension fund, which are long-term investors. So since the forestry industry is very attractive, they are likely to insert some of the money, into this equity investment, which will, pay back in the long run. So this is additional funding. And also, since this is a state-owned enterprise, so it probably, with backup with the government, it probably has, the credit of AA or AAA. So it's easier for them to borrow money from the bank, which can also be state-owned banks.
Yeah. So I think in our presentation we talked about those assets are fundamentally attractive to investors such as the pension fund in the UK. And we know there's free investment regimes within the EU. And in the asset itself, there's a sort of threefold growth. So you've got growth from the stock growth, which is biological growth, and you also have appreciation of timber in the central markets, and also there's appreciation of the land. So these are actually counter-cyclical to the economic cycle. So whenever there's an economic downturn, I think those pension funds will be interested to hedge their positions by investing in this fund.
If I see your numbers, the main increase, or basically the only increase, comes from private from private ownership, because state ownership, public ownership, states remain in terms of harvest. What happens if this is not successful? Because then the whole model will not hold the water. If you look at the other numbers, which are whether no, there's another tablet. Yeah, private harvest. You see, private harvest goes from 3 million to 6 million, while the public harvest remains the same. So this is a big risk if the private owners don't accept that model. Or do you understand?
Yes,
that?
yeah, no, I understand, yeah, completely.
So how do you deal with that?
Yeah, I think we do recognize that it's a big risk that the private owners don't actually join the scheme. And that takes a lot of time and it's time-consuming process. So in our action plan, we've actually said we started out a process, lobbying process in 2015. And over the 4-year period, we actually sort of expand the association. We recognize that it actually takes time for those private owners to have trust in us. That's why we sort of having their internal control procedures to enhance trust. In our model, we actually assume that in 2015, only 20% of the private owners get on board, and we see a 10% increase year on year. So we do recognize it is a gradual process.
Yeah.
And on top of that, the fees that we recognize in our financial model is very conservative from those private hires. It's only 10% cost plus. So the majority of our revenue is actually generated from public sales. And those private ones, we just operate on a cost plus basis. So whatever cost we incur, we recharge that to the association and book 10% as our commission income, which is quite small. So even that doesn't go well as our planned, it wouldn't affect our profitability that much.
And also, we prepared a backup slide, and you just through that. There's another reason why the private sector will cooperate with us, because we are a state-owned enterprise, and we have the same shareholder, which is the government, and those are the policy makers, and we can impose some policies to squeeze or to impose tighter regulation on the maintenance of the forest, so that the private owner of the forestry will have to just sell their woodland to the company.
Actually, I have a related question to that statement, because in your first recommendation, there's a big implicit assumption that consolidating all the 13 private concessions in a state-owned enterprise is the right thing to do.
Yeah.
Right? And the assumption is that the state-owned enterprise will be very efficient, is feasible, and the state-owned enterprise will convince the public to join. Right? So my question related to this is that how would you think about an alternative of, instead of creating a state-owned enterprise, giving just one concession to the best private bidder and using the same logic then?
Well, basically there are 3 ways, but joint venture seems to be an alternative, because we authorize the concession right, and they understand the market well. They know how to make a sale, how to maximize their profit. So that's their advantage, and we can cooperate. They can still operate, pay commission or have a claim on the profit, while just we also have a 50% share of the company. So that would be a joint venture. So each party will take advantage of the strengths of the other.
Okay, so then I'm not sure if I understand you correctly. So do you recommend now having the 100% state-owned enterprise, or do you recommend to have a JV?
Well, of course, the 100% ownership, public ownership, is the most ideal situation.
Why it's ideal is because we want to, in the end, we want to make up a value chain complete. Right now, we only have some of the very low profitable link that state-owned or government just involved in that certain industrial areas. But in the end, sometimes you have to protect the forest. Sometimes it's not interest-oriented or benefit-oriented. Sometimes you have to consider the whole country's benefit as a long term. So from this perspective, we think the value of the SOE can be better conducted by the government level. So we think that 100% SOE company should be the best solution.
And also,
I think actually your question is really a good question. We had a lot of debate on that during our discussion. We think whether we actually 100% acquire that or sort of let the contractors bid for whatever is in our favor, we let the contractor do the job. But then we sort of analyze the bargaining power from two sides. Because these companies have been relying on this concession arrangement for the past 20 years. And it's kind of we're in a slightly more advantageous position in case that they don't get the concession contract again, they'll be out of business. They have to find something to do their own. So we sort of take this opportunity to actually consolidate all the resources into our into the stakeholder. So in the longer term, we can actually improve the processes within the harvest and achieve greater economies of scale than contracting. But contracting is also a very viable solution in case that those companies don't agree to sell it to us, and then we can contract out. But in terms of the financials, I don't think it will affect our profit projection that much, because either we pay a contract fee. As long as we can have sufficient cash to buy them.
If all this would happen and there would be IPO, would you put your money into it?
Daniel, would you put the money into IPO?
Yeah, of course. Yeah, if I'm allowed, because in China the capital regulation is very tight. But this is really good assets. In China there's a person.
I'm just asking.
Yeah.
Okay, 谢谢。